top right, do you see the logo there? Which logo is that? Okay, good. That's my employer, and that's why I had to pay homage. How many people know what does it stand for? Like, why is it shaped like that? Raise a hand, please. Nobody? Wild guess? Raise a hand. Oh, no, we're not that cool. We are Berlin, but we're not that cool. So Zalando's story began selling shoes. That damn thing is the tip of the heel of your dress shoe. That's where the story comes from. Not entirely sure why it's orange, but hey, it is what it is. Anyway, cool. Very good afternoon to all of you. My name is Subir. I'm going to talk about how to connect your P&L, your product strategy, and your product roadmaps. I'm a group product manager currently at Zalando. Been doing this thing for 11 years. I think I was 11 years ago was that photo was taken. I'm not entirely sure. People tell me it's like when you graduated high school. I didn't know I looked like Jason Statham when I graduated high school, but the musculature was definitely not there. Anyway, yeah, so 11 years of experience, B2B, B2C, e-commerce, social commerce, subscriptions, been around the block quite a bit. And today, I'm going to start talking to you about a question that changed my view of the world. So we have, inside of Zalando, like every product manager goes through these prioritization conversations, right? Why should we prioritize Initiative A versus Initiative B, Feature A versus Feature B, Investment A versus Investment B. And we have these prioritization prioritization conversations on a sprint basis, on a monthly basis, on a quarterly basis, you name it. Zalando, in my previous role, which is mostly what my talk is around, we had these fancy funding calls once every 6 months. And this was an episode from 2023. Where there's a conversation of prioritization. And my beloved vice president back then asked me, what is the EBIT impact of your initiative? How many people here know what EBIT stands for? Okay, so you did better than I did, because my response, I have no idea. Like, what are you talking about, man? Cost me my credibility. Fortunately, they were fairly, giving second chances, et cetera, et cetera. The labor laws in Germany are quite strong. They couldn't get rid of me right away, so I don't know how to interpret that. But, blessing in disguise, it completely changed the way I think about product management. And in the next few minutes, I'm going to try to share what transpired afterwards, and hopefully this also helps you a little bit as well. Why do most PMs fail at commercial thinking, including myself? Okay, the animation is off, my apologies. So we obsess primarily over adoption. We had conversations today around how to do product discovery better, how to drive adoption better, focusing on user value, working backwards from where the use case is. But we do a pretty strong job of empathy, user journeys. We try to set strategy when mostly it's glorified road mapping of features over a longer period of time, if not just a month or just a sprint for that matter. I was doing all of this, hence speaking from personal experience. The problem is, if we create a lot of user value and we capture sum total zero of it, who is gonna, pay the bills and keep the lights on? We cannot afford to ignore monetization. And trust me, folks, I live in Berlin. It's like politically so much on the left. People are like, this is capitalism, et cetera, et cetera. Hey, the bill comes due at the end of the month, right, for everybody. So we can't ignore this one so much. We all miss the business layer, primarily in our day-to-day work. We need to think user value and business value, because like I said, without keeping the lights on, how can we come back to work tomorrow and continue to engage our users? Particularly if you are in recession, which this particular continent is, ROI becomes way more important and way more tangible and way more of a laser focus area, particularly for executives, when you're driving roadmaps and setting your roadmap up. How many of us here have at least once been questioned around the ROI of their product or product portfolio, particularly by an executive? Please, if I can have a show of hands. 1, 2, quite a few. It's quite interesting because we have this research that if you improve monetization around your product, it injects a far greater fuel into the value that your product gets to create out in the world compared to acquisition or anything else for that matter. Because it brings the fuel back, like pure first principles analysis, right? If you're monetizing more, you can spend on advertising more on acquisition, paid acquisition. You can improve the product more, putting more staffing into it. The whole cycle tends to run much better when you're improving monetization more and more. However, like I said, we all start, at least I also did, and most of my compañeros, as we say in Spanish, also did. We start from a different starting point. We don't naturally, and product managers don't naturally start thinking about commercial value. We are built, we are programmed, we are taught to start thinking user value, and we start from that. That's our first principle, right? And it serves us really well. Without creating user value, you can't monetize anything. Like, there's nothing to value. 100% of zero is still zero. However, to step into this gear of sorts, there needs to be a shift. We PMs must learn to do some things differently. And the way I summarize it is to learn to think like an investor rather than just pure product manager. What does that mean? I think we had some folks at Bata were talking about not to be a feature factory. The question always was, did we ship on time, etc.? Factory, right? I mean, I live in Germany. We are good at manufacturing, so I don't. This mindset is no stranger to me. Factorization. Moving from that, however, to an ROI engine. Was it worth it? Was the effort worth it? And this does not just include, and this comes down, and I'll walk through the P&L in just a bit. This comes down to not just headache of running or the overhead incurred in running a engineering and product and design and marketing team, but also variable costs, stuff you pay for, AWS or subscriptions or other services that you tend to use. Any of that, all of that factors in, because that's where you really draw the line, or you get to the point of was it worth it? And this is that shift that is underpinning from moving from just pure user value creation to now monetizing that user value as well, and being able to create value for the company or for the business that you are working at, and providing or realizing the ROI for the investments that they are making in funding your team, in funding your efforts, in funding your everything else. Fun fact, the language of ROI is something that can scale from our level, from individual, what we call IC product managers, all the way up to the CEO of a public company. Zalando is a DAX 40 enterprise. DAX, yeah. And I have a case study here as well, which I'll present to you. The scope of my work during the case study, for better or for worse, let's put it this way, if I screw it up, it would show up in the investor calls reports quarterly for the company. And from earnings calls or investor calls all the way till IC product management, the one currency that scaled was always speaking about the ROI. So this represents a bit of a roadmap shift as well. Once you start thinking investment, you start from the left. You start from the left. I'm trying to improve retention. I'm launching dark mode. Zalando now has dark mode. It's quite interesting. Moving from that, which is a feature roadmap or a product or a feature-first roadmap, we're moving to a more commercially aware roadmap. We look at cohorts of users and see, hey, can we improve retention of them? Fair enough. If we improve retention, I'm talking a Zalando example, of course, we improve GMV share. If you're running a subscription business, your ARR goes up, MRR goes up. That's top line. And assuming everything else also works out, do you improve the contribution margin, which is a profit measurement metric for the same set of users or a different set of users? So you start tying what's happening on the right-hand side of this slide already. Is you start with a product metric, and you work to tie it together with your commercial metrics as well. Hence the name of my talk, Tying Things Together. Anyway, moving on. How do we, assuming this is all clear, I mean, folks, please do interrupt me if I'm speaking something that you don't understand yet. Please do interrupt me, and please raise hands. Assuming this is you're still with me, the question then becomes, the first step to solving a problem is knowing that there is a problem, and hopefully the last few slides have done a good job of underlining that. The question then becomes, fine, problem identified, how do we action upon this? How to be a commercially minded product manager? 4-step process, folks. Level up on what I call P&L literacy, understanding what a P&L really means, what pays into it, learning to build that finance muscle aside from your product management muscle, number 1. Number 2, build a commercial triad. I mean, how many of us here have learned or know of the product triad? Please raise hands. So few, all right? I'm surprised. Product triad, maybe it's the labeling which is the problem. Product triad refers to product manager, engineering lead, and a product designer who come together to create the magic. We have one triad here. Today I'll introduce you to another triad, which is the commercial-focused triad. I mean, how many of you use OKRs at your work every day, or every month, every year? Some of them. The intent also here is to steer on joint OKRs. This is a critical piece. We can't steer on features anymore because consumers or anybody buying your users or your customers, they don't really buy features. They buy headache reduction or something else. They don't really buy features. They buy outcomes, as it were. And lastly, you stitch all these three together to build a self-compounding loop. These are big words, I understand. This seem like big concepts, but I'll break them down in just a bit. First steps first, P&L literacy for beloved product managers. Quick question, how many of you have seen this, or a version of this before, or understand what's happening here? One, that was a half, okay, that's two, all right. Cool, some of them, some folks, cool. Don't worry, we start from top of the chart, as it were, all the way to the bottom of the chart. So by the way, when folks refer to, I might be preaching to the choir, please do tell me if I'm not. But when people say top line and bottom line, this is kind of what they refer to. There is something at the top, and there is something at the bottom. Let's see what these individual things mean. Revenue, pure sales. Whenever you purchase on Zalando, thank you for paying part of my salary, by the way. When you purchase something on Zalando, that's sales. Average order value, monthly recurring revenue, contract value for purely B2B or enterprise or B2G cases, right? That's pure revenue. Then, churns or returns in an e-commerce context. When customers do returns, we have to refund them the money, we lost that revenue, right? When we have churns, we have got MRRs or ARRs dipping, which is also lost revenue again. So revenue, and then we have got lost revenue. Then we have something called contribution margin. This refers to a metric of how much revenue we made minus how much revenue we lost. If you're operating in an inventory model, like we are doing pure e-commerce, you buy products sometimes, and then you sell them. You call them cost of goods sold, the product line that we spend money on buying first. Top line revenue minus cost of goods sold minus all of this lost revenue gives you what we call contribution margin, which is a measure of profit. There are multiple measures of profit, of course. It's a measure of profit that you keep after variable costs. However, we are not done yet. It's not that easy to run a business. We have other costs as well. We have entrepreneurs in the room. I'm sure they can speak to this much more than I can. I'm just giving you a snapshot here. There are fixed operating costs as well. Technology infrastructure, customer support, marketing, administrative overhead, et cetera, et cetera, et cetera. If you open up the P&L statement or the income statement of any public company, you'll always see references to terms like these. And that's one of the best places to take this framework that you have in front of yourself and implement it in real life. So revenue, returns, contribution margin, more costs, and finally we get to EBIT, earnings before interest and taxes. That's it. This is like top line to bottom line. You see there are two measures of profit here. So this is also quite critical when you really get into the depths of it. But from a snapshot point of view, this is all the literacy you would really need. Thereafter, so I said it's a 4-step process. I covered step 1. I'll share the slides after I see you, quite a few of you trying to take photos. I'll share the slides, of course, and we can take it from there as well. Anyway, step 1, P&L literacy. Step 2, new product triad. Number 1, product management. No points for guessing. We need product managers in the room. We are not making ourselves, we are not killing our own profession, sorry. We intend to create value, which is what we are quite good at, thankfully. Otherwise, we don't have a job. Number 2, marketing. We communicate the value that we create. This scales to both B2B. We have product marketing for B2B. We have product marketing for B2C cases. We scale and communicate. We take a megaphone, or marketing takes a megaphone and communicates the value we created. Lastly, we have experimentation in a B2C context and sales teams in a B2B context where we deliver the value that we supposedly created and we validate. In entrepreneurship, there's this saying called sales cures everything. If nobody's buying what you created, nobody cares. The last step is kind of critical. So there you have it, folks. 1, 2, 3. You have a triad, but it's a commercial product triad. No engineering managers here, no designers here, because that's a separate product triad in and of itself. That's the product development triad, and this is the commercial product triad. And of course, there's a visual for this: value creation, value communication, and value validation. This all comes together. Step 2 done. Number three, what I mentioned in the previous that snapshot was we need to steer jointly on OKRs. And this is critical, that being able to connect the strategy at a company level or a business unit level and break it down to your roadmap. This is quite interesting and takes a while to get used to, so let's see. Let's go one by one. Number one, you look at what the BU strategy is, or the business unit or the company strategy is. Usually you are not in the room when this is being drafted, but at least this is shared with you in some capacity or some format whatsoever. That's the starting point. We start with that. Number two, usually they also combine, even if it's not publicly communicated, there are guidances on the commercial targets that are being chased for that particular year. We want to grow, or we want to have a GMV for a sales forecast of XYZ. We want to have a profit or a bottom line forecast of XYZ. Every public company does this, and that's why we can see those. But internally also, if you're not on the outside, internally in your own company, you can also ask for these or see these if you go looking for them. From your commercial targets, we want to get to which part of these commercial targets does your product portfolio can directly impact. And you do a bit of a first principles analysis. You work backwards from those commercial targets and see what you can impact. If you are the checkout team in an e-commerce setup, you're pretty close to that impact. If you're the marketing team in an e-commerce effort, might take a few hoops to get to, but you can still draw a straight line from there. But drawing that straight line, and I cannot stress this enough, thinking very first principles, thinking in a straight line really, really matters here. We need to work backwards from those commercial targets. Working backwards isn't just useful for user value creation. It's also very useful for this stuff. I mean, Jeff Bezos is a billionaire for a reason. Anyway, the reason I refer to that is working backwards comes a lot from Amazon. Anyway, we get to the, we have identified which chunk of these commercial targets our product portfolio can hit. Now, this problem is more and more localized. We started from the farthest thing away, which is company-level targets and company-level goals. We are coming closer and closer and closer. We get to quarterly targets for our portfolio. We try to break them down. Easier. Then, not done yet. Commercial triad, right? So we have 3 departments or 3 job functions working closely together. Each of them need their own respective goals, their own respective plans for the end of the quarter, for the entire quarter, sorry. Product, marketing, or sales and experimentation. So you have individual roadmaps now, and then you have an execution plan. For each of these 3 departments, each of the triad people, what should they do till the end of the quarter, half a year, you name it. That's a lot of heavy stuff, so let's keep moving. I'm going to make it simple for you. So this, once we have the plans, we have product management knows what to do for the rest of the quarter. Marketing ideally knows what to do for the rest of the quarter. Sales knows what to do for the rest of the quarter. This is step 4 and the last one. What you really want to build is a compounding loop. You identify an opportunity, communicate about it, get feedback from the market, identify new places where you can improve that value created, or something has fallen apart, go back to product management where you create value again, and circle back. It's meant to be not just pure collaboration, but it's meant to be a compounding cycle. It's not meant to be, I did this, I did this, I did this. Silos will kill this thing, folks. Let's not do that. Okay, how many of you are still awake? Just a quick show of hands. I haven't lost the entire room. Some of whom are not raising hands. I'm assuming you're legally asleep. All right, good. Cool. I mean, I'm talking about pretty heavy stuffs, and I don't want all of this to be theoretical, of course. So the stuff I spoke about, let's see how it worked out in my case with a case study. How many of you have actually seen that visual on Zalando before? 1, 2, 3, 4, 5, 6, 7, 8. Really? Okay. I don't expect so high. So this is called, we have a very strategically hidden premise inside of Zalando. It's very hard to discover. I don't know why. It's called Get the Look, where you can draw inspiration from creators and their looks and style yourself. The reason I did not know about this before this became my product is because I clearly am not the target demographic of Zalando. But, they give me 40% discount, folks, so there is a reason why I work at the company. Anyway, so these are called creator outfits. You can mix and match. And of course, true monetization style, we have a sponsored version of this, where say you are a creator and I'm Adidas. I will hire you to create looks with my assortment, and depending on how cool you are or how fancy you are, hopefully you get some followers, people buy, right? So that's basically the premise. It is built as an advertising product because somebody's paying Zalando money to get more sales. We are trying to monetize Zalando traffic by getting more and more people to come and shop with us for that particular brand. It is a B2B product, not a B2C, with product market fit, of course. And in my time, which is around 2023, it's a strategic growth bet for Zalando overall, as well as Zalando Ads, which is the business unit I was part of. But you see what I've done here already. I've already arrived at where the company's or the business unit's midterm strategy is. This was an important item. We want to grow this particular portfolio. Thankfully, or for better or for worse, they put me in charge of it. Let's see how it panned out. But we have got the first piece of that 5-step process already. Okay, the animations are still here and there. So we started, so ZMS, by the way, stands for Zalando something something. It is our strategic focus, it is a strategic bet. We are already working on that, so that part is taken care of. Number one, we start, and then we start, once we have that, how do we break the steps to take? Once we have identified that this is indeed a midterm strategy bet for the company, we go through that 5-step process and we break it down into quarterly goals and quarterly plans for the entire triad. Based on user research, stuff we are good at, stuff product managers are quite trained at, we focused first up in the year to focus to drive core product improvements, foundational improvements, make the UX easier for our partner users, improve the value add for them, includes things like click-through rate and cost per click and things like that. H1 of the year was focused primarily on doing this basic homework. That's Q1 and Q2. Q3, we started pressing the pedal. The product management part of the commercial triad, that work is mostly in place now. Then we move to the second piece of the puzzle, product marketing. We wanted to expand partner adoption and partner awareness. Lots of pilots, lots of messaging, lots of newsletters, lots of webinars, et cetera, et cetera. We wanted to gain new users. Very adoption focused, very acquisition focused. Lastly, Cyber Week is the biggest sales event for e-commerce in this continent. Usually in November. My current teams are heavy in prep for the next coming one, which is in like a month's time. But at that point in time, all you can really do is focus on the money, nothing else. The foundational work for value creation is done. Communication of it is done. All you want to do now is deliver that value and make sure somebody pays you for it. And that's what we did. We positioned it entirely for the biggest sales event of the year, sales event focus, and pushed this product to the market and hopefully we got results from, we got monetization, as it were. We monetized the value that we created. So this is what we landed up with. So H1 of the year, we did some core product improvements, ad inventory, ranking logic, click-through rate, cost per click, et cetera, et cetera. Q1 and Q2 of the entire year, this is all we did. Starting Q3, as I showed in the visual before, reference stories, positioning pilots, webinars, emails, hopefully not spam, let's see, but anyway. And right during Cyber Week, when we had the biggest sales event, we packaged this with other products. We did a lot of sales event push. We hounded our brands, Adidas and Nike included. Hey, please buy. Anyway, but we did see quite some good results on that. And this is how the results panned out. So number one, when you put these 3 roadmaps together, or these 3 action plans together, it looks a bit messy. But it looks fairly detailed as well within that mess. This is what we had. You see the 3 swim lanes, marketing, product, and sales. This is a snapshot of a Google sheet, literally. I didn't even dress this up. This is literally what we ran with inside the company, and this is what we did for the entire plan for 2023 of the year. 2023, doesn't matter. How did we pan out? H1, we have sales targets around the entire year. Before we implemented the triad, before we built the compounding loop, before we started really positioning and steering on joint OKRs, H1, we achieved our sales target or commercial target to around only 80%. You can see that, and you can see this primarily because our focus primarily, as you can see on the screen, was entirely on improving the core product in and of itself. We hadn't focused on the market yet. This is H1 story. Q3, we have already started putting some of this compounding in. We have already started using marketing to communicate to partners that, like, hey, we are delivering value, come join us. We already had some inbound interest, as we call it in sales. Folks were coming to us without us needing to push already. We overshot our target achievement for the year, for the quarter. We were at 132 compared to 80 to begin with in the previous half a year. And by the time Cyber Week and the biggest sales event of the year comes in, we overshot 140% for the quarter. Overall, we outperformed the entire commercial target plans for the entire year for this particular portfolio as part of this business unit's play. The compounding, the isolation of the individual execution plans, but still steering together, worked. And the results were there for all of us to see. So yeah, you will see a lot of mess, hopefully with a lot of detail inside it. Done right, this performs better than most other efforts that I have known in making sure that our products have ROI, can deliver commercial results. So that was my story. That's what I learned after that epiphany, and hopefully did not get fired. I mean, thankfully did not get fired, but after that particular question from the VP earlier in the slide where we began this conversation. Now it's your turn. Develop P&L literacy, follow the 4 steps, find your levers, which can you move. Sometimes you can drive top line, sometimes you can reduce cost, sometimes you can drive sales. Find the levers that your portfolio can move, number 1. Number 2, work backwards from the business unit strategy to check what you can impact given those levers. And lastly, rewrite your roadmap as an investment plan. After this, after implementing this, you're no longer just a product manager. My apologies, you're an investor too. So think investing first. And that's it, folks. That's all that I have for you today. Thank you so much for taking the time before lunch.